Hello and welcome. If you're earning any money outside of a standard paid job here in the UK, then you are absolutely going to want to pay close attention. We are about to break down some of the biggest changes to HMRC's data gathering powers in a generation, and, more importantly, what it means for you.
That's right. If you're selling your creations on Etsy, maybe renting out a room on Airbnb, or even driving for a service like Uber, the way the taxman sees your income has completely changed. As we head into the 2025/26 tax year, the rules of the game are just different.
And to make sure we get every detail right for you, this entire briefing has been put together with the tax experts over at My Tax Accountant. They've helped us cut through all the jargon to make this information clear, accurate, and actually useful.
Okay, let's get into it. Here's a quick look at what we're going to cover. We'll start with why all these changes are happening in the first place. Then we'll look at the two big new ways HMRC is getting data. After that, we'll see what it all looks like in the real world, and we'll finish up with how you can stay on top of things.
First things first, it is so important to understand that these new powers haven't just appeared out of thin air. Nope, they are a direct response to a huge national issue, and it's called the tax gap.
The whole reason for this massive shift really comes down to one pretty staggering number: £58.5 billion. That's the government's top estimate for how much money is lost every single year to tax fraud and simple errors. To give you some perspective, that's enough cash to pay the salaries of over 1.5 million brand new nurses for a whole year. It's a huge deal.
And hey, you don't have to take my word for it. This quote is straight from the government's own report. It shows you just how seriously they're taking this. These new data powers are a massive part of their plan to shrink that gap.
So, how is the government going to fix this? Well, it all starts with the first of two new data connections. And this is the one that's going to affect pretty much anyone who uses a digital platform to earn a bit of money.
Now, here's a little fact that catches so many people out. It's not just about how much money you make. If you make more than 30 sales in 1 year on a single platform, that platform has to report your details to HMRC. That's true even if you only made a tiny amount of money. The other trigger, by the way, is earning over €2,000, which works out to about £1,700.
So the key thing to realize here is just how automatic this whole process is. You make a sale, the platform logs it. End of the year comes, they bundle up all your sales data, and poof, it's sent straight to HMRC. It's a digital pipeline that you have absolutely no control over.
And believe me, the net is incredibly wide. These rules are based on an international standard, and they're designed specifically for the modern gig economy. We're talking everything from selling crafts to renting out your flat, driving for a ride-sharing app, or even renting out your bike through an app. It's all covered.
Okay, pay close attention because this is probably the single most important thing to understand in this whole section. The platforms report your total sales. That's the top line number. What they do not report are your costs. They have no idea what you paid for materials, for shipping, for marketing, anything. HMRC only sees the money coming in, not the money going out.
And that leads us to a really vital pro tip. Since HMRC is getting your income figures on autopilot, the pressure is 100% on you to track every single legitimate business expense. If you don't, you could end up getting taxed on your total turnover, not your actual profit. And that could mean a shockingly high tax bill.
But that's not all. And here's where most people go wrong. The changes go way beyond just the platforms you sell on. There's a second, much wider data connection that's now in play.
So stay with me, because this next point is a real game changer. We've talked about the platforms reporting your sales, but what about the bank account where that money actually lands? This is where the new powers start to get really serious.
You see, in the past, it was actually quite slow and clunky for HMRC to get data from other companies. That is all ancient history now. As of late 2025, new powers allow them to ask for information from almost any third party that holds your data, making the whole thing faster and giving them a much wider reach.
So, what exactly is an information holder? Well, it's a deliberately broad term. But crucially, it now explicitly includes your bank, your building society, any financial institution. This means HMRC can now legally require them to hand over data, making it faster and easier than ever for them to see your full financial picture.
Okay, let's pull all of this together. We've got data flowing in from online platforms, and we've got HMRC with the power to ask for data directly from your bank. What does this new reality actually mean for the average freelancer or small business owner?
To really make sense of this, let's walk through a real-world example. How does all this actually play out for a typical creative freelancer trying to make a living in London?
Let's meet Alex. Alex is a graphic designer who, like so many people these days, has a few different income streams. They sell some prints on Etsy, they rent out their spare room now and then on Airbnb, and they pick up design gigs on another platform. This is a perfect example of the new economy. So, here's the new reality for Alex. In the 2025/26 tax year, both Etsy and Airbnb will automatically send their sales data to HMRC. At the very same time, using those new wider powers, HMRC can request data from Alex's bank. They can then cross-reference everything, comparing the income the platform has reported with the deposits in the bank account, and then comparing all of that to what Alex actually declares on their tax return.
Okay, so facing this new data-driven world, what on earth can you do? Understanding the new landscape is one thing, but knowing how to navigate it is what really matters. Let's look at the solution. Here are 4 proactive steps you absolutely must take. First, keep perfect digital records of everything, all your income and all your expenses. Second, and this is more critical than ever, use a separate bank account just for your business. It makes life so much easier. Third, know your self-assessment deadlines. And finally, don't wait. Be proactive. The goal is to declare everything correctly and on time, way before HMRC even thinks about sending you a letter.
Now, of course, a quick but important disclaimer. The information we've shared today is for general guidance. Tax law is incredibly complex, and it's always changing, so your own personal situation will always be unique.
For that reason, if you want expert advice that's tailored specifically to you and your business, the team at My Tax Accountant are there to help. You can give them a call on +44 020 570 8531, or you can drop them an email at info@mytaxaccountant.co.uk. Getting this right is absolutely crucial, so please don't hesitate to reach out for professional help.